It does seem like if macro doesn't improve or it doesn't stay flat, if we take again their guidance at their word, and based on my channel checks, it does look like the economy is suffering, especially from an auto perspective. If that sort of stays around where it is today, doesn't get any worse, it does seem like Tesla's margins could, get down to the 16 level at these levels, maybe 17 if you're lucky. But it does seem like somewhere between 15 and 20 is very much in play for the next few quarters from the auto perspective, and how quickly
Hmm.
they can roll out FSD, how quickly they can realize the cost savings from Berlin and Austin, how quickly they can ramp up energy, which again, we're getting more and more signals from them as well around that business. It does sound like it's going to take a while for those facilities to recognize those those 20% margins, right? That we got guidance on from
Yeah,
Zach, really. This is the
that
first
was
time that
pretty
we got
interesting
that.
too.
What do
Yeah.
you think about that?
Yeah, that was interesting. There was this whole like vitriolic debate on this 6 months ago or so, or even more
Yeah.
recently, about like Tesla's going to have 50% gross margins on the energy side of the business, and they're going to be ramping
Should
to
have given him
these
credit.
crazy rates.
Should have given him credit.
Yeah, it was just like we were pushing back on all along. Now,
Yeah.
I did kind of cave and say that the 50% margins are possible. Sounds like the guidance that they're providing is no, that like 20% is the goal. Could they be sandbagging? Yeah, but I'm kind of apt to take them at their word here. So, I think I forget exactly the margin that I had them scaling to, but it was certainly higher than the 20% gross margin in the modeling I've been doing recently. So, I've got to bring down the long term kind of energy margins as well. But the opportunity is still like massive. It's like, all right, well, you've got 50 billion of revenue, and so you've got a $10 billion in gross margin at a 20% margin, rather than I don't know 15 or 20 if the gross margin were um, you know 30 or 40%. So it's like, all right, the Uber bull case took a beating there, but it's still way higher than where Wall Street is expecting it to go. So kind of good information. I'll have to go down and bring my modeling valuation stuff down a little bit, I think, to account for that. But still, the upside is very significantly there.
Yeah. Do you think there's starting to be sort of a recognition by some of these analysts that Tesla is not just a car company? Because I'm hearing more questions around energy. I heard the questions around Dojo. Do you think that's going to
Yeah.
impact Tesla's ability to have a price earnings ratio that's continues to be significantly above the rest of the auto market? How do you think about that?
Yeah, I think it definitely will maintain that premium. So, right now they're at what 50-ish, probably down a little bit now, from where that PE had been. Um, but like maybe the market decides they need to be at a 40 or a 30 or something like that. But like they should never be at a 10 or 15 or whatever Ford and GM are at. Because they do have all these, even some people like who's that Drew can't believe I'm blanking on his name. The bear, Drew Dixon,
Drew Dixon,
calls
yeah.
them like the Musk options. Like these, Dojo and FSD and all these things, they might be worth something, but I can't value them, and I'm not going to bake them into my base case. And that's like a reasonable stance. But as they start actually getting closer on some of these things, like to me, it's like the most conservative thing you can do is just ignore them and say they're worth zero. Um, it's not. I mean, the way that Elon described Dojo, I thought was pretty interesting, and kind of comparing it to Amazon Web Services, it was like that was something we thought they could do for a while. And I liked the way that he kind of framed that of a, it's not a sure bet, but if it is, like, man, watch out. So that would be something, another kind of catalyst that I didn't really have in my playbook, is if they start selling that as a service.
Do you think that includes the money they'd make from the training on FSD? Do you think that's how he's conceptualizing, or is it just purely talking about renting it out as a service? That multi $100 billion number.
Yeah, I think he's talking about renting it out as a service. So I mean, he was saying like an order of magnitude decrease in the cost of training. So Tesla gets that direct benefit, obviously, in the kind of training that they're doing for FSD right now. But then if they have this architecture that's just like super efficient and cost effective, they can just essentially spin up a new version of AWS and sell that training capability. Which, I mean, imagine how much the market for like AI training hardware is going to grow in the next 5 years. And if Dojo just happens to be like one of the best architectures to handle that problem, um, My gosh, what is that worth? I don't know, but a lot.
No, for sure. Yeah, I think I'm curious to see how the market's going to process this. I do believe folks that have been sort of on the camp of, Tesla's going to continue to suffer here in the short term, and it's not going to be as rosy as it seems. I think those folks probably got a little bit of validation today around some of the short term, maybe even medium term potential price stock movements. But I'm really curious to see. I am really curious to see how that shifts over into next year, because the guidance we got, again, if the company, this is sort of like the thing that I'm very glad they owned up to their sort of, not, I don't want to call it misguidance, but knowing that they gave guidance on the previous quarter, and it has changed to the downside. Now that they've done that, I wonder if sort of like the guidance we got about next year looking better will actually take hold at some point. But it does seem like it's a lot of wait and see what happens, because that continued sort of, hey, are uncertain about the macroeconomic environment. I mean, it's just, we don't have a crystal ball. Uncertain
Yeah,
macroeconomic times, man. That was my biggest takeaway, is that they're basically saying, yeah, the economy's weird right now. We don't know what's going on,
yeah.
and we're having a very tough time telling you what's going on. Yeah,
What did you think about Cybertruck delivery event in Q3? That sounds
yeah.
like a party.
That sounds like a party, boy. And end of Q3, hopefully end of Q3, I think was the actual verbiage that was used the second time it was brought up. I'm excited for that. I mean, I think it's another. It sounds like definitely this year. That's what it sounds like to me. Definitely, absolutely, the first Cybertrucks will be delivered this year. I hope. I shouldn't say definitely.
And definitely
It
FSD
looks
will be
likely.
solved. My car will be a robo taxi
Yeah,
this year
yeah.
for sure.
Come on, Elon, stop being so damn ambitious. It is funny how being so ambitious gets punished in the stock market in a way, but I guess it's because the stock market is trying to be a future pricing mechanism. So I mean, that's why we get these moves. If you remove emotion. So um, yeah, I'm pretty excited about that. I think that's going to be really good. They've sort of started hyping again how good of a product it's going to be. Calling in a Hall of Famer was good marketing verbiage. They say, hey, it's going to
Yeah.
be a Hall of Famer. I'm excited, man. It's a brand new product segment for the car. We should start seeing revenues kicking in this year. I do wonder how much if the stock market will price it in at some point this year once those first deliveries come off the line. It will take a
Mhm.
while to ramp, obviously, but I do wonder if that's gonna, for the short term folks following the stock, wonder if that gives them a little bit of a reprieve and ability to be a little bit happy and to look forward towards something that could be a positive. What do you think of it? What do you think of Cybertruck?
Yeah, I was just thinking today about like Em and I have been on this rampage about marketing and just how it just seems like they're being a little bit stubborn about not doing it. Given, I mean, just look at their margins; they're clearly paying a price for that stance.
Yeah,
Um, they explained it, so that's fine. That's the way that they're going. But Cybertruck going on like streets and like somebody who knows nothing about like Teslas or EVs or whatever sees that roll down their neighborhood, like what they're gonna say, what the hell is that? And it's gonna
yeah,
start all these conversations. Like that's gonna be a viral marketing, I think, sensation in a way that'll really help demand, throughout 2024 and beyond. So, um, I mean, I'm just so excited for that. I mean, I think it's exciting from the marketing standpoint. I think it's exciting just as a product. Like I frankly just want to get one and drive it around. And I think it's exciting because the demand is so high that I think it's going to be a boost to margins. Now, it'll not initially. I mean, first part of the S curve, I'm sure they're going to have production issues. Even if it is super high margin, when you're selling 5,000 of them in a quarter, that's not going to do much on the overall financials of the company. But looking forward, in the markets, I think are forward looking. You know, you start seeing that impact in Q4 of this year or something like that, and then analysts are doing a ramp and saying, okay, yeah, this is going to be higher margin. Looks like we're getting out of the recession. I really wouldn't be surprised if we have a significant rally, latter half of this year. But not investment advice, and I've been dead wrong on that sort of thing in the past. So um, remains to be seen. But I don't know. I'm actually I try to be very level headed about all these earnings calls, and I know there's a decent amount of bad news in here, but I'm excited, honestly. Like
yeah,
long term, very exciting.
yeah. It's a It really does seem like they are starting to flex their muscles. I mean, this is pricing power. We've talked about pricing power, right? Many times before. If there was a situation where Tesla had to drop the prices to make stuff happen, they could, and now they are. And now the check is going to be checking everybody else, and like GM and Ford and Toyota and everybody else, as as the company continues to lower price and hits more and more markets and more segments. The proof should be there over time that says, as they've continued to do this and they're retaining what they're saying healthy margins, which we're not quite sure exactly what that means, and what they're describing to be a bad macroeconomic time. Like, let's assume, I don't know, they have to get freaking prices another 10-15% lower than now, which might put them in single digit margins for the auto market. And if that's what happens, that's what happens. What's going to happen to everybody else, right? I mean, we should either see dramatically lower volumes from these companies to try and marry price to a lower cost structure and retain their profitability, or we'll see something similar where they go from single digit margins to God knows what margins, what sort of negative margins they might get, right? So I'm curious to see that dynamic play out. And that's going to be my way of testing the thesis, is that if you really think the macroeconomic environment is bad and it's impacting you and everybody else that's selling cars, we should see this everywhere else. And if we don't see it everywhere else, then I think it's a big question for Tesla that says, you're saying this, but I'm not seeing it from every other automaker. What's happening? But we are seeing it. Q4, Q4 was flat with Q3. Q1 is down versus Q4. Q1 was a channel stuffing quarter, and inventories went from X number to that number. So we are seeing it. It's just the automakers haven't reported on it yet because they have that secondary layer of stuffing the channel with the dealership network, and now the dealership network's getting stuck with cars they can't sell. And that's the environment we're in now.
Well, and it's worth pointing out that Tesla is giving themselves a harder goal than the rest of the industry. I mean, like Ford, GM, and all the incumbents are trying to just like not lose share. Tesla's trying to grow at 50% a year. Like it growing 50% a year in a downward macro economy is like, if you just like chart it out like Econ 101, okay, supply is increasing, and demand is decreasing. That like very clearly implies a very sharp decrease in price necessary. So it's a really tough spot that Tesla's in right now, but I also don't think it's worth reading too much into it beyond that, the fact that it might be a more difficult 12 months than we otherwise might be expecting. So it's like really tough goal for Tesla, but like them trying to keep these aggressive sales targets is putting so much pressure on everybody else.
Yeah, for sure.